Why are you so bullish? Even with the price target cut, based on what we've seen over the last few days, where does the bullishness come from?
The bullishness comes from an expectation that if we look at the last couple of weeks, we have arrived at the point of maximum uncertainty, okay? And it's like whether you think about it in terms of market volatility, uncertainty measures, frankly, tariff rates, which is the crux of where the uncertainty is from, all these things really aren't sustainable in the long term, because what ends up happening is you get the recession scenario. And I think as an investor, you have to believe a couple of things here. You really have to believe that uncertainty is arriving at peak, and you have to believe, and we do, that Washington has no desire to precipitate a recession, because frankly, precipitating a recession has a lot of other knock-on unintended consequences.
None of us can get into the minds of the president. I've got no idea what he's thinking this morning, going ahead to the tariffs that will kick in overnight. Can we touch on valuations? What's the forward multiple on the S&P right now?
It's well over 20 still.
Does that speak to maximum uncertainty?
It does not, okay, but we have maintained this for 2 years now, and it's certainly worked reasonably well over the last 2 years, is that valuation alone doesn't end a market cycle, okay? What ends a market cycle is an oncoming recession, an uncooperative Fed, or bond yields moving higher. And if we think about the last couple of weeks, look, there have been two significant wins here. Number one, oil prices are a lot lower than I think any one of us would have expected. Agreed. Given the fact that Russia and Ukraine is still in escalation mode, and the Middle East is still in escalation mode for the most part. And bond yields have also come in.
You went through three things, and I was just thinking tick, tick, tick. Fed's showing no willingness to step in. Yesterday, bond yields were higher. What's the circuit breaker for?
So you have to differentiate between a Fed willingness to step in and a Fed who's going to say inflation, which now, in our view, is in the mid-threes for 2025. I don't think he's going to remove the word transitory, because, and our research shows that essentially the real threat is less inflation. It's the one-time hit from wherever we go, and our operating view is that tariffs will actually settle in around 15 to 16% on a global weighted basis, call it by the end of the third quarter. That's how investors can live with it going forward, but that the real threat is the new tariff regime slowing growth perhaps even more.